Hello everyone, how are you doing? Um this video is on rental property. What things you need to consider when you want to buy a rental property. Uh, this is a good time to buy because market is dropping, market is going down every day. This is a good time to buy. So let's discuss what are the good things, like what are the things you will check before buying. As you can see on the screen, is it suburb? Is it close to public transport? Is it price? Is it year of construction? Is it metro location? Is it a beachside location? Is it a newly built? So what exactly is the criteria? Well, it is mix of all, but these are not the main factors. These are definitely the factors, but financially, these are not the main factors. Let us come to the financial side of the factors which decide whether you should buy the property or not. Now, what are the factors which are normally overlooked when you buy a property? Normally, people buy close to beach, close to public transport, size of the land, maybe few 10, 15, 20 meters extra they will buy it, or maybe new kitchen they will buy it, or a good roof, or a good design, or maybe an extra room they will buy it. That's not the financial factor to buy. You have to see financially what is a good reason to buy that property. So there are three basically reasons, three or four reasons basically I would say. One is depreciation. If you're buying a rental property, then this is a very important factor because in newly built properties you can claim about 25,000 depreciation, even 30,000 or even 40,000. So if you are claiming 40,000 depreciation, then on a higher slab you're getting about 50% back, close to 50. You're getting about 17,000 from tax office, and depreciation is a non-cash expense, as you know. So that is one of the major factor for deciding when you're buying a rental property. Depreciation, how old is the property, and what is the construction cost, and what depreciation you will get on that. Okay. The other factor is discounted. Let us say the market value of the property is 600. The property is not very good, like property needs repairs of let's say 10,000. But what if you can buy the property for 400? If you can buy the property for 450, it's still a very good deal, because if you buy for 400, you spend 10,000 on repairs, your cost is 410,000 and the value is 600,000. It is hard to find those properties, but it's not impossible. You need to do some research, you need to spend some time, and you can find it. Okay, so that is the second criteria, should be a discounted property. The third criteria for a rented property is, if you are buying investment property, is positive cash flow. Positive cash flow is, you have to estimate the expenses on the property. You have to estimate how much is the interest, insurance, council rate, water rate, lawn mowing, pest control, all those expenses, and how much will be the rent. The property should be neutrally geared or positively geared. If the property is too much negative geared, then it's not worth it because it will drain your income. Every year it will take some money from your pocket. You are doing investment so that you make some money, and it should not take money from your pocket. This is very important. So if you want to buy investment property and you want to hold for a long time, don't buy that property which is draining your income. All right. The next factor is development potential. This potential, it means that if it is a one house, can you build four more houses? Can you buy five more houses? Can you buy two more houses? Can you buy one more house on that? This normally happens when the land area is more. So the more the land area, higher the chance, but not necessarily. If the zoning is such, you can build units on that. You can build a shop, right? So this means it has got development potential. So this is also a factor which you should consider when buying. What is the worst strategy? What is the danger when you buy the property? See, 50% of people, of investors, they lose money. They just burn their, fingers, they just burn their hand and they say never again. I'm never going to buy it again. Why do they say that? Because they have a wrong strategy. What is the wrong strategy? When they buy full market price, they buy negative gate property. It is draining their income and they only expect it will grow in future. How do you know it will grow in future? In 2023, prices have gone down 20% on the outskirts of Sydney, maybe somewhere 30%. Prices have gone down, there is no buyer. So do not expect prices always go up. Prices go down also, right? So if you're buying, if you're paying a full market price, and if it is a negative geared property, very high chance you're not going to make a profit, right? So your criteria of buying should be you need to book profit at the time of buying. How do you book profit at the time of buying? You have to see the slide earlier one, where if it is development potential, passive cash flow, it is a discounted property. So those factors you have to consider when you are buying a rental property. Not if you pay full price. No, if you are buying one with the negative yield, negative rental, or negative gearing, no, you cannot hold for a very long time. So what is the final conclusion? Final conclusion is that these are some these are some screenshots. As you can see, according to ATO article, average property investor loses $12,000. Why they lose? Because they are negatively geared. If it is negatively geared just because of depreciation, that is fine. Why? Because it is depreciation is a non-cash expense. You have not paid out of your pocket. But if it is if you're losing money because of cash expenses, because the mortgage is more, or insurance is high, or rates are high, if you're losing because of that, then bad luck. It is definitely a bad investment. If you see that video, it says 99% people fail. I would say minimum 50 to 60% or 70% people, they fail in real estate because they do not follow those 3 4 principles which were discussed initially. So please follow those principles and just make sure you make profit at the time of buying. You don't make profit at the time of selling, but you can definitely make profit at the time of buying. Thanks for watching, guys. Hope I have given you some quick tips on buying investment property. 2023 is a good time to buy because interest rates are going up and market is falling. You need to buy in falling market. If you like this video, please share it with your friends and subscribe to our channel, and hope to see you soon in the next video. Bye for now.